Hello, Empower You, and welcome to another episode of Mortgage 101. I'm Cynthia with the Rebecca Foote Mortgage Team, and I'm here to talk to you about USDA loans. So let's get started. What is a USDA loan? A USDA loan is a government backed mortgage insured by the United States Department of Agriculture Rural Development. So basically, this means that if the borrower defaults on their loan, the lender must foreclose on the home, then the government will pay back a portion of the loan to the lender. So essentially, the lender isn't on the hook for the whole loan, and they're willing to be a little bit more lenient who they lend to. Who should use USDA loans? So, USDA loans are good for clients who don't have a lot of money saved up and they need 100% financing but aren't eligible for VA loans. They also allow for the most seller's assistance, and I'll talk more about that later. Buyers who are looking to move into rural areas should look into a USDA loan, and buyers who have a lower income would qualify for USDA. They do have income limits, and later we'll go over what those limits are. So, what are the basic details? There's no minimum down payment for USDA loans. If your client just doesn't have the cash on hand, USDA does allow for the maximum 6% seller's assistance. And if you aren't sure what seller's assistance is or how it works when you're writing an offer, please check out our video, Seller's Assistance Explained, on our channel. And everyone's heard the term monthly mortgage insurance. Well, the USDA calls it something different. They call it an annual fee, and it gets broken down into monthly payments. It still serves the same purpose. It protects the lender if the borrower were to default on the loan, and it is a flat rate of 0.35%. If you want more information about mortgage insurance and how it affects monthly payments, please check out our video, Mortgage Insurance Explained, on our channel. And like FHA loans, USDA loans have an additional upfront fee that is required. The USDA calls it a guarantee fee, and it is 1%. It can be added to the loan amount, it doesn't have to be paid upfront. The minimum credit score that is allowed is 620. Gift funds are allowed, and there are no restrictions on who can gift that money. So let's say the property appraises higher than the sales price. Closing costs and prepaids could be financed into the loan up to the appraised value. There are limitations to this, and obviously, we won't know if the home is going to appraise until after we get the appraisal back. So, we do not encourage clients to think about that as an option. We will make sure that they have the funds to cover their closing costs, because if it doesn't appraise, they're already under contract and they're going to need to come up with those funds. And unlike some other loan programs that have income limits, the USDA requires you to count all adult members of the household and their income over the next 12 months. The adjusted annual income must be below the USDA moderate income limit. So let's say the borrower has grandma living with them. So the borrower must count not only grandma living in the house saying, yes, grandma lives here, but they also have to count any income that grandma is receiving. So if she's getting any pension, disability, social security, they have to count that as part of their income, even if she's not on the loan. And they're also strict on assets. When the underwriter reviews the bank statements, they're going to look at every deposit and it must be verified. Even if it's just a small, like, oh, grandma gave me $20 for my birthday, we're going to need to see a copy of that check. They just basically want to make sure that the borrower doesn't have $100,000 in assets sitting in the bank or a retirement account that they could have used to buy the home. They offer this 0% down, and they want to make sure that the right borrowers are getting into the home and not investors being able to flip a home for cheap, not having to fork any money out of pocket. Uh, so let's take a look at how to calculate eligibility deeper and where you can find this information. So this is where you're going to go to see if your income qualifies you for a USDA loan. It's very important that you go to this address because guidelines can change and this is updated to the most recent eligibility. It will prompt you for the information needed, but let's walk through the information together. So this is what the website is going to look like. You want to click on single family housing guaranteed and then you click on income eligibility. See, it prompts the information. So we're going to pick Pennsylvania, and we're in Cumberland County, so we'll keep it simple and pick Cumberland. So here you have to input the information. So number of people in the household. So we're going to have two borrowers that have a school age child and they have grandma living with them. So we've got four people. It asks you how many are under 18. So they have a school age child. So there's one. And they'll ask, is the loan applicant or co-applicant age 62 or older? No. And are there any disabled persons living in the household? For this, we're just going to say no. And the nice thing is, if you're unsure of what you need to type in there, they have these little question marks, and you can just hover over them, and it'll give you a synopsis of what you need to put in. So then we'll click next. And then it asks for more information. So we have a school age child, so we're not going to have any childcare expenses for this experiment. Their base employment income. So let's say borrower one makes $2,000 a month. It does ask for gross monthly income. And let's say borrower two makes $2,500 a month. They would need to put in any overtime income or bonus income that they have. Um, And then we'll say grandma receives Social Security and she gets $500 a month. Okay. Then we'll click finish and it gives you the results right here. Applicant meets the income limits for the Section 502 Guaranteed Rural Housing Loan Program based on the information that was entered. And then it tells you what you entered in. So we said that they had an annual household income of 60,000. It does have like a standard deduction like taxes. So the total deduction would be $480. So the household adjusted annual income is $59,520. And right down here under the guaranteed rural housing program, it says that the maximum income for the state and the county that we picked is $97,750. So they're well below the income limit. So they can proceed with the USDA loan. Okay. All right, what are the general property requirements? So the property must meet HUD guidelines, which means a specific HUD appraisal will be required. And some of the things in the guidelines include chipped paint on the windowsills, broken or cracked windows, and making sure that there's handrails where there's stairs. They're really just looking out for the health and safety of the borrower. We do have a handy cheat sheet, and if you don't have one, please reach out to us and we'd be happy to get you one. So you can look over it while you're going through the property. If the property has a well, then a clear well inspection will be required, and the property must be in a rural area. So let's talk about the property eligibility. We're going to go back to the website and I'll show you how to check this eligibility. Again, it's important that you go to this website because the property map is constantly changing, and this website has the most up to date eligibility borders. Okay, so we're back at the website again. And we're going to click on property eligibility. It's a giant map of the US, and we're just going to type in an address. Oop, 18 1890 Mary Lane, Carlisle, PA. So it pulls up the map and it says this address is not located in an eligible area. You can see by the borders here that at one time this house probably was in the USDA eligible area, But like I said, as population changes, they change their map. So now it is not located in an eligible area. Let's see what it would look like if you did put in an address that was. Let's just type in. So this is how it would come up if it said that it was located in an eligible area. Anything that is in the shaded areas is not going to be eligible. So if you know somebody is looking in the Carlisle area, you could just kind of look at the borders and get a general idea of what's going to work and what's not going to work. And obviously, um, like Harrisburg is not going to fall in those guidelines, Enola, Lemoyne. So it'll just help you have a better idea if you're not familiar with the USDA map. Okay. Of course, if you have any questions, please don't hesitate to reach out to us, 717-609-4044. You can email us at teamrebecca@footcapital.com, or you can contact us through rebeccafoot.com. If you enjoyed this content and want to see more, please don't forget to subscribe. If there's any topics you would like us to cover, please let us know. Have a great day.